Howdy, swings. Today we had a positive PPI release, and as I mentioned in my previous videos, the market was already ready to react big to even a small piece of good news. But even after accounting for the impact, the market didn't wait for tomorrow's CPI release and went up more than expected. Was this a temporary overreaction or the start of a rally? Let's take a look at Fullhapce daily swing market forecast to get some answers. Swing trader's friend, Fullhapce Intelligence presents August 13th Wall Street market forecast. Daily market moves. Markets were up across the board, with the Nasdaq up significantly and the VIX index down 12%. S&P 500, 5,434.43, 1.68% up. Dow Jones, 39,765.64, 1.04% up. Nasdaq, 17,187.61, 2.43% up. Russell 2000, 2,103.1, 1.53% up. VIX Index, 18.24, minus 11.93% down. Here is the daily sector performance. Tech, consumer discretionary, banks, asset managers, materials, and autos did well. On the other hand, the energy sector, some consumer staples, and insurers underperformed. Here are the reasons. Stocks opened higher on Tuesday thanks to a lower producer price index, PPI, and less market volatility. Investors are starting to take more risk in their investments again. Expectations for the Federal Reserve's interest rate cut in just over a month have increased. Here are things to consider. Atlanta Fed President Bostic noted that a rate cut could come by the end of the year. Several companies have lowered sales expectations, reduced their workforce to cut costs, and expressed concerns about the economy. Ongoing geopolitical risks between Iran and Hezbollah and Ukraine and Russia are also notable factors. Here is daily market forecast for swings. The market easily broke the old resistance level of 5,350 on the S&P index, but created a new resistance level at 5,430. The market seems to be hesitant to move higher without a downside test. With the big move up from yesterday's close, the market has become more sensitive to the CPI results that will be released tomorrow. According to our calculations, volatility has not yet fully left the danger zone, and any unexpected concerns could trigger a bear trap that would revive volatility and create downside stress on the market. In that sense, we may see a pullback in the market on Wednesday. However, as we mentioned in our weekly market outlook last week, even if a bear trap occurs, the market is likely to quickly recoup its losses and rebound after showing that the downtrend has reached its limits. If the market rebounds without any attempted bear trap, it seems likely that the S&P will rally to the 5,550 level before facing the next downside pressure. Here are some other helpful insights. After the turmoil of early August, the market is showing signs of improvement, and the near-term outlook could be more positive with potentially favorable news. However, the overall picture is not favorable due to slowing growth, reduced pricing power, and insufficient support for company valuations. Companies reported better than expected earnings in the second quarter, but most were driven by cost-cutting rather than revenue growth. Geopolitical issues continue, but they don't seem likely to cause a market pullback. Here is devil's advocate. The opposing scenario is that the rally finally began today and the market will continue to rise above the S&P 500 index 5650 without any attempt to pull back. In this case, investors will have the opportunity to enjoy the rally while maintaining or increasing their current positions. The rationale for this scenario is as follows. The U.S. Producer Price Index, PPI, for July was released lower than expected, which could be the start of positive economic news. More specifically, service prices fell and other economic indicators appear to be moving in a favorable direction. Investor confidence is improving as issues related to Japanese investments and the stock market are diminishing. Today's market gains seem to support this scenario. The opposite scenario also makes sense, but we think it is unlikely as it would be difficult to go above the previous July 16th highs without a downside pressure test after a decline of this magnitude. Nevertheless, the opinion that we are heading for a rally without a pullback is something that viewers should give some serious thought to. Here is the conclusion. The daily market bearish potential has been building up a bit in reaction to today's market gains and is now picking up speed. On the other hand, as we mentioned in our weekly market outlook, the upside potential of the market is very strong. With or without a downside pressure test, the weekly market is likely to continue its uptrend. We are still leaning towards the view that there will be a few days of pullbacks to test the market's resistance before the market starts a full-fledged rally. Wednesday could see a pullback in that sense, so it might be a good idea to increase the hedge. However, that's just an opinion based on how hedged investors are, not an indication that a full-blown bear market could be on the horizon. It would be wise to weigh in on the market's upside and maintain the view that there could be an occasional recoverable pullback. We urge viewers to consider both the main outlook and the counter scenarios to effectively manage risk. Thank you for watching. Fullhapce Intelligence, the best investment partner for swing traders.